Good morning, class. Now we have a very important topic, that is insurance. What is life insurance? Very first topic is what is life insurance. We discuss here the meaning of life insurance. Life insurance, as discussed by R.S. Sharma, life insurance contract may be defined whereby the insurer, in consideration of a premium paid either in lump sum amount or in periodical installments, to pay an annuity or a certain sum of money either on the death of insured or on the expiry of certain number of years. This is a definition. I will discuss this definition in a very simplest manner here. First of all, you have to pay as a insured person, you have to pay certain premium. That amount of premium decided by on the basis of your age and on the basis of for how many years you want the policy from insurance company. Say you go for 20 years policy and your age is 36 years right now, so on the basis of one table, premium table, they will let you know the amount of premium. That premium sometime may be given to the insurance company on monthly basis, sometime on yearly basis, sometime a huge a lump sum amount you have to pay to the company. At once you pay the amount to the insurance company, but company will pay you the final amount or maturity amount at the time of maturity or at the time of death of the person. So here there are two parties. One is insured, the person who is interested in insurance contract. Insurer is a company which give you insurance policy in consideration. Consideration means they charge some premium and then they give you assurance to cover your risk against any kind of bad, like death event happened or accident happened or something like that, or at the time when the policy mature, whichever is earlier, company will pay you, as mentioned, either at the time of expiry of the policy or at the time of the policy, at the time of death of the person. Here come certain features of life insurance contract. First of all, we discuss here the features of general contract. Everybody know na, there are certain features of general contract which I think you people discussed or read in your contract act, that is offer and acceptance. One person give offer to another person, means insured person give offer and insurer company accept it, or insurer company give you offer and you accept it, that offer ki yes, I am interested in your insurance policy. There is a consideration means contract must involve some amount of mutual benefit amount. Premium is the consideration from insured and promise is the consideration from the insurance company. Agreement between parties, there should be an agreement between the two parties. Agreement like agreement between insured and insurer. Capacity of the parties, both the parties of the contract must be legally competent. Legally competent means the party shouldn't be minor. If the party is minor, in that case no doubt the the nominee of the person, matlab, there should be one major person in the comes under that particular policy, then it become legal. Or capacity to party means the person shouldn't be insane party. Legality means the objective of the contract must be legal. The contract should not violate any kind of legal requirement. For example, no insurance can be done with the smuggled goods. We can go for insurance only in case of the goods which are legal in nature, like medicines or or a house. Okay, then written contract should be in written form, as insurance policies, in case of insurance policies, they always give us everything in written form. two-fold paper they gives us. In that in that particular paper, everything is mentioned. Now here come the features of life insurance contract. Point number one is insurable interest. For any valid or accurate contract, there should be a insurable interest present. If no insurable contract, the contract is totally void. Void means you cannot pressurize the other party legally to fulfill the contract. It should be, it should, you should have insurable interest. If you want a policy on your own name, it means you have interest in your own life. Or suppose you purchase a policy in the name of your wife, you have an insurable interest in wife. Or you should, if you are interested in the policy of your son or daughter, you have interest in their life, that's why you are going for the policy of son or daughter. So insurable interest means insurable interest in your own life. Okay, insurable interest of other life. Wife has insurable interest in husband's life. Okay, husband has insurable interest in the life of the wife. Father has insurable interest in son's life. Son has insurable interest in father's life. Creditor has insurable interest in the life of the debtor. You understand that now? So if you don't have insurable interest, you can't go for insurance. At most good faith. At most good faith means life insurance contract is based on a principle of that at most good faith. uh, Both the parties must take full and true disclosure of the fact, all types of facts, whether material facts or risk involved in it. Suppose, take the example of life insurance. If you are going for a life insurance policy, you have to disclose your right age to the agent, to the company. If you have some medical problem, you discuss openly with him or her. Even in that case, at most good faith is possible. In case of insurance company also, you must disclose the policies, money back policy or other policy. What are the hidden agendas inside the policy? You should clear out everything. Then element of safety. And the insurance provides safety and security to against in both the cases, safety as well as security, right? When death occurs or the term of insurance is expired, life insurance policies are generally taken for longer time period. Okay, say for 20 year, for 50 year, 15 year. The loss to the family at the premature death or payment in the old age are adequate provided by the life insurance. In other words, security against the premature death and old age suffering in both the cases are covered in the life insurance. Understand? Then we have element of investment. And investment element lies basically only in case of life insurance. Under the life insurance, the insurer, in consideration of the premium, undertakes to pay a certain sum of money, either on death of the insured or on the expiry of the fixed period. Say, matlab, if the policy is for 20 year and 20 years over, automatically you will get the amount with bonus and everything. The payment of premium is a type of investment. On routine regular basis, no, you deposit certain sum. On the basis of that sum, you will get some interest. Even you are eligible for you know any kind of loan also. You pledge the policy and you get the loan from the insurance company also. Now, here come the certain objectives of life insurance. Point number one is family protection. Life insurance gives you protection against the uncertain event death. Okay, family member will prove safe. The suffering, no doubt, if the family member, head of the family, no more, in that case, this is a big loss for family, but not financial big loss. Means you are rich or poor, you are head of the family, wishes, you have children and everybody, to plan, safeguard the education, marriage, welfare of the family even after your death. Then we have provision of old age. Life insurance also makes a good provision for old age also. The reduction of income in the old age is a very very big problem, because in the young age now you have so many resources how to earn income, but at the time of retirement, obviously your body not give you any kind of support to earn a lot because of weakness inside the aged person. In that case, if you have some annuity scheme of insurance company, you will get on regular basis kind of pension. That pension give you chances to enjoy the life even after retirement. Provision for children. If as we all know, say you have a daughter or you have a son, at the time of the birth of the son, if you have a policy of 20 year, when your son or your daughter in the age bracket of 21, you need a huge amount for the education, post graduation, or if you want to send your ward to outside India, you need a money. So that insurance policy will approve, you can say, fruit to you to fulfill all the requirement. Even at the time of marriage you need money. So if you have a policy, you can easily attain the get the done marriage done of your child. Provision for estate duty. Estate duty means duty is imposed on movable and immovable property. This is the tax recovered by the government before the transfer of property to the legal heirs, right? Amount of this tax can be more or and very difficult to pay. So life insurance contract help at this moment. Means life insurance afford, or you can say life insurance is the most practical way to ensure the definite payment on one's death. Means in every case now, the time procedure is so long. At the time of death you have to pay, you have to make papers for the property, immovable property. But in case of insurance now, you know that after the death of the person or after the maturity of the policy, you will get this sum. So people feel so secured. Business protection. Business protection, like if you are in a business, creditor secured his loan by taking the insurance policy in the name of debtor. The partnership, businesses may discontinue at the death of any partner. So company will give you amount. That amount is divided among all the partners or reinvested in the business. That is also safeguard the interest of all other partners. Now we have importance or advantages of insurance. No doubt, advantages are so many. I always suggest everyone you go for one insurance policy in your life, at least one policy. If you go for 10 policies, now that will also proves, cake for you in the life. Point number one is importance of insurance to individual. Point number one, individual get so many benefit like family protection. I think this point was discussed even in the objective. Means your family member after the death of the person, their marriage, their education, right? Surrender value and facilities for the loan. Huh? Suppose when the insured is unable to pay any premium further, he can get the surrender value of the policy. That is possible only in case of insurance, right? Even if you need money and your policy is continued, you pledge the policy and you get the loan against the policy. Then we have regular source of income for the old age. In the old age, I think I had discussed, in the old age now you need funds and you have no capacity to work more, so you get on regular basis one pension. Then provision for children. Provision for children education, children, marriage or other expense. If you need a huge amount, like multi-purpose policies are there. Hmm? Exemption from income tax. Under Income Tax Act, even 1961, we have a provision of 20% rebate is given on tax on the basis of life insurance. Okay. that is possible. That is a big cake for the insured. Then we have life insurance encourage saving. Life insurance is the only option which encourage you invest more and more saving in on regular basis, a fixed sum on regular basis. Once the habit develop, that thing generate, you can say, that thing create capital formation for the nation, as well as for individual, that thing earn huge bonus and interest. Now we have importance of insurance to the business. Point number one is enhancement to trade credit. Obviously, life insurance corporation provide you credit facility to big industrial houses. The insured person are getting more loan due to certainty of payment after the death, right? Then we have business business firmness means partnership business. There are say two or three partners, maybe discontinue at the death or retirement of any partner. But if you have a policy, then the legal representative easily have to pay the legal hair of the of the dead partner, and or the retiree partner, his share in the firm. But the insurance policy provide adequate funds to at that particular time, so economic position of the firm becomes strong even after the death of the partner. Then welfare of the employee. The welfare of the employee is the responsibility of the employer. Therefore, the employer has to look after the welfare of the employee. For that reason, they go for and different schemes, group insurance schemes, accidental insurance, sickness benefit, pension benefit. The insurance proves, you can say, fruit for any business to pay in case of any emergency to the employees. Safety from embezzlement of funds. Hmm. Insurance company issue a policy that indemnify the employer against the direct economic loss suffered at the time of the dishonesty on the part of employee. Okay, or we can say in case of fraud. Safety of paid loans. A creditor can save his debt by taking the policy against the Debtors Act. Then we have importance of life insurance to the society. Obviously, it helps in capital formation. Capital formation, regular regular investment, regular capital formation, and in this way, production possible. Helps in providing employment. More saving, more investment, more production, more consumption. It means they require more people and they offer jobs. Automatically, the unemployment problem resolved. Reduction in the inflation. The insurance helps in reduction of inflationary pressure, like money supply, by extracting money supply in the form of people try to save, people try to give to the insurance company. In this case now, they try to control the prices of the country. Then we have advantages of life insurance to industrial section. Industry grow, economic welfare possible. Industries work without any fear of loss or something if they have a policy. Then advantages of life insurance to the government, the huge amount received by the life insurance corporation, that all the amount they invest in different schemes of the government. That's all for today. Tomorrow we will go for the another topic that is a very interesting topic in the series of life insurance. So that's all for today.